All right, let's talk about this really fascinating puzzle that's playing out in the markets right now. Because on one hand, you've got headlines screaming crisis, but then you look at Wall Street and it seems like they're reading a totally different book, a much, much more optimistic one.
So the news itself, it is stark. We're talking about a major geopolitical crisis unfolding. Peace talks have collapsed, and now the U.S. has set up a full-on military blockade in the Strait of Hormuz. And, this isn't just some remote waterway. It's a critical artery for the entire global economy. And they're backing it up with some serious naval firepower.
So what's the first thing that happens? Exactly what you'd expect, right? A huge spike in oil prices. Brent crude just shot up, landing just shy of $100 a barrel. And that just pours a whole lot of uncertainty into what was already a pretty fragile global economy.
Okay, but here's where it gets weird. This is the mystery. At the exact same time all this is happening, the stock market, and especially the tech-heavy Nasdaq, is on an absolute tear. We're talking its longest winning streak in over a year. So what in the world is going on here?
And that is the central disconnect we're going to unpack today. You got this dangerous international crisis over here and a roaring market rally over there. How can both of these things possibly be happening at the same time?
I mean, just look at the numbers. They really tell the story. The market opened lower when the blockade news hit, which makes sense. But then, it just completely shook it off. All the major indexes swung into the green. The Nasdaq was leading the charge, up over 1.2%. It's almost like investors collectively decided, you know what, this war, not our problem.
So to figure this all out, we've got to look at what the market is actually paying attention to. And it turns out Wall Street has this kind of laser focus on a few key things that are basically drowning out the sound of those war drums.
Okay, our first big clue comes from the bond market. There's this metric called the break-even inflation rate. Now, to put it simply, this is basically what the big money investors are betting inflation is going to look like down the road.
And here's what's so interesting about that bet. The gap between what they think inflation will be in the short term versus the long term, well, it's gotten a lot smaller. So what does that mean? It means that even with that big oil spike, the market is basically saying, yeah, this inflation bump, it's going to be temporary. Prices are going to cool off way faster than we thought before.
And this just perfectly captures the market's whole mindset right now. You've got analysts like Barry Knapp saying it outright. Investors are already looking past this thing. They're placing their bets that the impact on inflation is going to be a flash in the pan. Short-lived, manageable.
All right, clue number 2, and this one, it's even more powerful. Corporate earnings. I mean, the forecasts for this quarter aren't just good, they're spectacular. We could be looking at a 13.2% jump in profits. That would be the fastest growth we've seen since that big rebound after the pandemic back in 2021.
So the really crucial thing here is where all this growth is coming from. Get this, it's the 6th straight quarter of double-digit growth, and pretty much all of it is being carried by the tech sector. To be more specific, we're talking about chip makers and the huge companies spending billions and billions on artificial intelligence. And here's the kicker. A lot of that spending is already locked in for the whole year.
But this rosy picture from Wall Street, it's not the whole story, not by a long shot. To really get what's going on, we have to look at the reality check happening on the ground. Because out there, in the real world, this conflict is causing some very real pain.
And the top executives, they're definitely not ignoring the risks. I mean, you have the CEO of Goldman Sachs, David Solomon, who, even after a strong quarter, came right out and warned that all this fighting could really hurt investment banking. It just goes to show you, the C-suite is way more cautious than the folks on the trading floor.
And you can see these ripple effects just spreading out everywhere. The luxury giant LVMH, their sales took a hit. Qantas Airways, they're looking at a massive 32% jump in their fuel bill. And guess who feels that pain? We do. U.S. airfares shot up 15%. And then there's the housing market, which is still in a slump. Sales just dropped to a 9-month low.
So this brings us to the verdict, right? The reason for this great market disconnect. Wall Street sees all that real-world pain. They're not blind to it. But they are making a huge bet that one single incredibly powerful trend is just more important than all of that other stuff combined.
I mean, check this out. You've got two of the biggest investment firms on the planet, Citigroup and BlackRock. Both of them recently went from being cautious, neutral on U.S. stocks, to telling their clients to overweight, which basically means buy more. That's a massive vote of confidence right in the middle of a global crisis.
And if you look at Citigroup's reasoning, they spell it out perfectly.
They're basically saying that in a world that's just full of uncertainty, the single most reliable, profitable, and resilient growth anywhere on Earth is coming from one place, and one place only: American AI and tech companies.
Then BlackRock comes in and doubles down on that with just a staggering number. They are forecasting 43% earnings growth for the U.S. tech sector by 2026. 43%. I mean, when you're looking at that kind of long-term potential, a short-term geopolitical crisis starts to look like, well, a minor distraction.
And so there it is. That's our answer to the disconnect. Wall Street is making a very clear, very explicit bet. They're betting that the long-term, world-changing story of artificial intelligence is a much more powerful economic force than the short-term disruption of a war. The belief is that the future promised by AI is just so big it outweighs the danger of the present. And that, well, that leaves us with the ultimate question, doesn't it? Is that bet the right one? I guess only time will tell.